General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. I think I need to close this. It didn't even go up there. It's a paper tray. All right, so let's start. Oh, wait. Start here. Open anyway. Okay, let's get out the paper trading account. Let's look at today's delivery. Today's delivery wasn't really that bad. I caught the sale. And then they did all of this. I ain't participate. Thursday usually caps the weekly range. I think my fib here from a long time ago is a good target. It's a 618 and we got CPI. So that's kind of laid out. Anchor reassessment. I mean, that's an excellent question. Because I was thinking Tuesday, but this is actually Asia high right here. Because it's 20. This is midnight here. Something like that, but that's an Asia high that time. So what is this? Wednesday? And this is PM, which is a weird time. But it's safe to say this is the anchor point. Here. And here looks like the target. And we got CPI. A bullish SMT. It's hitting on YM. I don't see no ES popping up. Check the settings. Time windows. Yeah. I got ES. Yeah, because I only got to looking for SMT times. Wednesday PM created the suspected low of the week. Tuesday was Netflix. Netflix did bad. Maybe it was Netflix bad earnings that gave the catalyst. Weekly buys template. Yeah, we still bullish. Overall, shifting framework hit rate. It's bread and butter until things kinda go back to a normal news cycle. What's a good case study? Taking note of the highs created in Asia. Note that the one last week and the one this week was used as a target, holding true to the theory that Asia range is engineered liquidity on U.S. assets theory. Time frame context. Yeah, lines macro is bullish. Expansion mitigation signals. No, this is still an inside week. So until this week close, I can't call it a true range expansion. High probability. It's low probability conditions. So one setup for ICT 2022 model, one set up for life models, and ICT macro times have been hitting. Narrative framework accuracy. Been good so far because only taking clear setups. Will be the experience and the failure. Have to focus on staying in positions for when my alerts hit. Don't want to be out of bullets or capital when the opportunity present itself. Half of the battle is being ready with the loaded gun. Hold on. Positions. Case study vault reference. We're watching these Asia highs. I also started looking at those the 3 weeks old, 3 week gaps, seeing how we kind of using that for the IPTA. Yeah. Profits plans must, yeah, give that man $1 trillion. Trade fears knock investors, so people are getting scared, and it's in the news. That means we can moon. Let's do the date on this, because that's how I know I'm done. All right, now we got it. CPI. PMI is after that, which is it's red folder too. Next week we got Fed fund rate, and then we should have NFP, I believe. Today was expansion. I mean, hold on, let's get the we expanded. It was pretty one-sided. No, the expansions have been large range days wiping each other out while the VIX is over 18. Wiping. Is that whipping? I don't know. It's close. I did London. I was high just because of time. London high 2 to 4, all that stuff played out. I'm thinking it's Wednesday. It is. No, Terminus did not hit today. Let's get the deliveries. Okay. Oh, Control Z. I gotta start locking. So boom, boom, boom. We'll hold these. Yeah, this is our expansion so far, which is insane. Buying under daily open, maybe one or two deviations below here. I really wouldn't even undo like that because it pairs with this. I wouldn't even engage NYPM sell side liquidity. It's a little too dark for my background. Oh no, it's not that dark. Buys here. I'll be interested to target here. London lower the day ideas. And CPI to push us up, but I can see us pushing down for London, going to fair value to buy, chopping to here, weaking out everybody that wants to go up here, and then going up here after everybody's broke. Sounds like something NASDAQ would do. Boom, boom, boom. Let's do this. Okay. Buying under NYPM sales side liquidity makes sense for fair value to target the fair projection at bam. Here we go. Okay. H1 doing. This should stay here. Perfect. This is where we at. That's the old all-time high. I do still kind of like running this low. Buying retracements here just makes sense. If we do push up and I want to sell, I would target this previous week's closing price. I'll come back to this gap. Okay. Plan is still the same. To wait for a sales liquidity run to pair orders to go higher. Let's go to the daily. This is An amazing accumulation here. Just this whole block of price. Really, this first candle, Monday's candle, then we closed it. Now we kind of closed back at it. This is like a key Monday for me. I'll keep weekly open price and I'll pull up. Look at this gap. That's how strong it is. Oh, I locked it. Okay, that was smart. Locking my higher time frame levels. This is about a high, written in notebook anywhere. That's the breakout traders. But this thing is going high. We might not even come back here. It'll be funny if we just push up and then CPI drops us. Prices running. I'm not chasing, especially since CPI is tomorrow morning. These are plays you already have to be in on the swing side. Okay, let's look at silver. Save this. Switch layouts. Okay, it's the silver layout, but this is the Nasdaq chart. Here we go. So we did push up and take previous day's high, but we basically just came back. So nothing happened. Previous day high, then returned inside previous day range. Okay. H1. Kind of still in this range. I mean, now it's like it's just heavy. This might be enough. And we might want to go here. I do like this. This is my low hanging fruit, but this makes the most sense for CPI. This is low hanging fruit. Here, and put this on top. Sales here. This 4-hour FEG can go. I think it's locked, but it can still go. This order block is not going to be here anymore. Let's go lower. Do this, not like this, but let's make this gray dot thin. Okay, it's too light. I'll look for this rotary RAM. I don't know if that worked. Control V. Oh, there we go. Now I want to see price run this low first and then look to sell. In that order. Maybe CPI spikes, but I will want this to hold. We need something to print here. It depends on if this prints and give us like a breakaway gap. We got an IO FED or whatever, but that's the targets. We'll let it hold. It might hold here and just deliver. It's dangerous. Okay. Looking for lower prices, but with CPI and where price is now, we can hold and news can deliver the objective in 1 second. So it's best to stay on the sideline. Unless you're trying to YOLO. I mean, it is a thing. Get an eval, push the button. It's legal. It's not illegal. Let's go to the daily. Yeah, let's take some lows. We got the old IPTA, the new IPTA. Let's just take this level off because IPTA moved. Let's see here. This looks heavy. I will wait to sell retracements next week. Next week is Fed fund rate. So we might be on the sideline for a while with our silver and EU because it's all good. Can't trade everything every day. And then you try to switch, do something different. You're getting out of position. So just stay in position. And we ain't gonna miss. This hit like I wanted it to, but it didn't go far. It's really waiting for CPI. I even closed a little paper trade. I'm glad I ain't do it like personal account or anything like that. Got a good reaction off the key level. If I was scalping, that would have been the play. But price is essentially weighted on CPI. So we holding in the range. Not NAS, Euro. H1. What is this? Oh, old gap. Old gap, old gap. There's probably another old gap somewhere here. No, it's a bag. That's Monday's low. We never even came back to it. And I still want higher, but we might not get that higher. Like, I should move this to this. It don't make sense, especially with how it's moving. For us to get that big of a candle, we could though. It depends on how CPI behave. Let's see. What my target? To Monday low. Price so slow right now. I think we need government shutdown to be over. It's kind of atrocious, despicable. I need some new adjectives to describe the ugly price. Deplorable. That's the Hillary Clinton word. This look bearish. Can't even front. Especially with how it's looking right now. This is the giveaway. We're not closing here. We should take this out. This inverse has been inversed and we haven't closed here. This should be the target. Here. Yeah. Definitely do not buy this. This is super bearish. If the 20-day low looks reachable. And look at how the last 2 days created a small range. We can still sweep both sides before delivering lower. There we go. Boom, boom. Didn't do that for that. No. Price just been swinging back and forth. Order flow has been bullish, but the news cycle has kept frameworks. I don't want to say choppy or unreadable, but frameworks nimble. I learned about pattern narrative myself. Getting better at reading price. Just watch the levels CPI went to and journal them. Okay. All right. That's that on that. Y'all have a good day. Peace.